Hey, welcome to the First Time Homebuyer Workshop with Julie, Marion, episode number 19. And today we're talking about the closing period, specifically what happens after you have mentally moved from thinking of buying a home to I'm buying this house and getting through the mortgage process and closing, which at the end of this process, you will say, I bought my first house. So, up to this point, you've had this lovely conversation with the loan officer, and they're super friendly and they're getting all your information so that you formally apply for the loan. Well, here is where the constant communication and the curtain is drawn. Remember in The Wizard of Oz, where the great and powerful Oz hides behind the curtain and to tell you what he needs to have happen? I often think of the underwriters like this, where they're making all these decisions and they render this big decision behind a big curtain. Well, they ask you for all of this, but there isn't any communication from the underwriters. Not ever. Real estate agents can't talk with them either. They are shrouded in mystery. And I have to say, it doesn't end up like Total pulling back the curtain and then they end up being a nice old man with a little wisdom. No, but we have figured this out for you. So let's empower you today. And I'm doing this because after 38 years in the real estate field, 20 as an urban planner when I retired as a planning director, and then I became a real estate broker and I did that for 19 years. The industry is still shrouded in mystery. And I think it is terrible. For first time home buyers, there isn't a clear, concise way to get you where you want to go to buy your first house. You really rely on disjointed information and bits and pieces here and there. But I will tell you, no, you do not have to be a millionaire if you have the knowledge and know what the process is and know what steps to take so that you can become a homeowner, whether it's a single family, a condo, or multifamily. I don't care what type of house it is, but you can do this if you want to. I've spent the last 2 years crafting a comprehensive course specifically for first time homebuyers. And it's kind of like once you take it, you'll never need to do it again. And just so you know, I plugged this into ChatGPT, and that little devil missed 3 huge sections that ties everything together. I am crazy about where we're going with this AI, but the experience and the knowledge go so much farther. There are free classes, and well, I will say that phrase, you get what you pay for in that arena, because they really only cover the finances. So you can do that if you want. But if you really want a one-stop shop that removes first-time homebuyers remorse, come to our workshop, and it's located at thefirsttimehomebuyerworkshop.com, and check us out. All right, enough of the sales pitch. Today we're talking about the closing period. So when does that happen and what is it? Well, it basically starts when you apply for your mortgage, formally apply, meaning that you have gotten through all of your due diligence for your decisions about whether or not you're actually going to buy the house or the condo. And the bank receives your formal application. The bank orders the appraisal and the loan review begins. The closing period, also known as the closing process or settlement period, or some marketing phrases you might see around town, is that you'll see signs that say in escrow. And it refers to those final steps involved in completing the sale of the property and transferring ownership from the seller to the buyer. There are about 7 milestones in this process. So here's a breakdown, and then we're going to break down some details even further. Number 1, the financing is finalized. If the buyer is obtaining a mortgage to purchase the property, the lender finalizes the loan details during this closing period. And this includes reviewing and approving all necessary documentation, such as the loan application, the appraisal report, and verification of employment, income, assets, and gifts, if any. And I stress here, finalizes the documentation. So if you're receiving a gift, there must be documentation. Then the banker commits to you on this particular piece of property, and it's typically memorialized in what's called a mortgage commitment letter. Number 2 is the title search and title insurance. The title company conducts a thorough title search to ensure the property is clear of any liens, encumbrances, or legal issues that could affect the sale. Title insurance is typically obtained to protect the buyer and the lender against any unforeseen title defects. Number three, the preparation of the closing documents. The escrow agent, the title company, or the closing attorney prepares the paperwork, including the settlement statement, which is a list of all the bills, a deed, a mortgage, and any other paperwork required to transfer ownership of the property, say a lead paint form. Number four is a final walkthrough. Prior to the closing, the buyer typically conducts a final walkthrough of the property to ensure that it is in the same condition as when the offer was accepted or what is expected, such as any agreed upon repairs or improvements. Number five is the closing. On the scheduled closing day, the buyer and seller and any relevant parties, such as real estate agents or attorneys, title representatives, and lenders, they meet to sign the closing documents and finalize the transaction. During this meeting, the buyer typically pays the remaining funds due, including the down payment, the closing costs, and any prepaid expenses. Number six is the transfer of ownership. Once all the closing documents have been signed and the deed is recorded with the appropriate county or municipal office, the buyer becomes the new legal owner of the property. You are a homeowner. Number seven is the distribution of funds. The escrow agent or the title company or the attorneys distribute funds to the appropriate parties, including any payoff of existing liens or mortgages on the property, paying of the closing costs and fee, distributing the proceeds to the seller and to all the salespeople that helped you with the transaction. Those people get paid. The length of the closing period can vary depending upon factors such as the complexity of the transaction, the efficiency of the parties involved, and any unforeseen delays or issues that arise. In some cases, the closing process can be completed in as little as few weeks, while others may take longer, somewhere between 30 and 90 days. So that's the process. Those are the milestones. But here are some comments here. Oh, baby. Are they going to go through all of your finances, your financials, your taxes, your deposit? They're going to flag every little thing, every cent. And that's what the bank does. That's what they're required to do. And they will make sure that you can actually afford to buy this house in detail. Yes, the loan officer did issue a pre-approval, but now it's super, super in depth. And that means you need to be on your best behavior. You know what I'm talking about. I tell you, don't buy anything that is not out of the normal living day to day. Your rent, your groceries, going to work, commuting. It's not a time to plan and book and pay for a vacation. Buy a car. Those types of activities will be a red flag to the bank and likely cause you not to get the loan. You also need to pay all your bills on time and in full as well. So it's a really good idea to get everything organized. You know what I'm going to say, right? Yes, before you start house hunting, before you pick up that phone, before you spend time online or stopping by at open houses. Because the time you spend making sure that all of your finances are in order will make sure the mortgage commitment process will be smooth. One time I had a real estate agent call me up because my buyer had forgotten about a bill, and he was such a jerk. He says, "So I guess this deal is going to fall apart because your buyer has crappy credit." I mean, come on. It wasn't that big of a deal. And yes, we did get to closing, but it was stressful for the buyer and it did cause a little bit of a delay. When the bank issues this mortgage commitment, that means that the property is appraised for the value of the purchase price, and the bank feels comfortable with the amount of the loan you are taking in exchange for a promissory note to pay them back. Technically, the mortgage commitment is a formal approval from the lender to extend the loan to the borrower based on the information provided on your loan application, as well as the appraisal for the property. The mortgage commitment outlines the specific terms and conditions of the loan, including the loan amount, the interest rate, the term, say 15 or 30 years, the type of mortgage, if it's a fixed or adjustable rate, any other special provisions or requirements, and it's recorded at the county. Now, just so you know, people can look up your mortgage and they can know how much you owe, but they don't know how much you put down or what your interest rate is. There's also something called a conditional mortgage commitment. This is not a mortgage commitment. So if you get this, you still need to get an extension in order to meet the deadlines as we've talked about before, and it needs to be in writer with the seller agreeing. And then you need to hustle, hustle, hustle and get the underwriter whatever they need immediately. I cannot stress this enough. It's not time to put this on your to-do list and take care of it over the weekend. It's going to your supervisor and telling them you have to take the rest of the day off to get what the bank needs pronto. There will also be categories such as verification of the borrower's financial information, verification of gift letters, of canceled checks, and resolution of any outstanding conditions or issues identified during the underwriting process. If you get a fully underwritten pre-approval letter before you make the offer, most likely, there will be contingencies such as a satisfactory appraisal of the property. But with that type of pre approval, it is highly unusual to get a better financial letter. Mortgage commitments typically have an expiration date, after which the lender may withdraw the commitment if the borrower has not fulfilled the necessary requirements, such as maybe an interest rate change. So it's essential for the borrower to meet any outstanding conditions and close on the loan before the expiration of the date to avoid potential delays or complications. It's fine when the interest rates are going down in a market, but it doesn't work so well when the interest rates are going up. So be cognizant. Once all the conditions of the mortgage commitment have been met, the loan proceeds to final approval, and the closing team gets a nod from the bank saying we are clear to close. And that's where number 3 starts in preparing the closing documents. Simultaneous, the title company, they handle closings west of the Mississippi in general, and or closing attorneys in the east. But there are some hybrid states in the south where they have closing professionals and they also have attorneys involved in the process. And they'll be pulling this title to the property, ensuring that the property, yes, indeed, can be sold. And it has clear title, meaning that you will receive the property without any encumbrances, a clean slate, so to speak. The seller will pay all the taxes and the electric and gas and oil bills up to and including the day of closing. But then you will be responsible for any bills associated with the property the day you take possession, as you're the new owner. You will be presented with a plethora of choices related to your mortgage and how you want to set up your finances as far as the bills for the property. Some banks will require 3 months of property taxes, for example, to be escrowed in an account. You will probably be given a choice as to whether or not to purchase owner's title insurance. And you will be required to pay for 1 year of home insurance a couple of days before the closing. And you have to pay for this home insurance in full. It's not a monthly payment plan. Then the closing disclosure is prepared with all the fees, and you will get this 3 days ahead of time. Make sure you look at it and add up all the charges. You need to understand what they are and why. One time I had a situation where there was a mistake and the buyer left the closing with an additional $839 because there were multiple charges. So be diligent. Additionally, because legal documents are being signed and notarized, you need to bring your license or your photo ID to verify who you are. So the closing team will call you and tell you the amount of money that you need to bring to closing. Now, for a while, wires were allowed to happen, but because fraud is so prevalent, typically a cashier's check is often required. But now too, there are companies emerging so that you can move the money digitally. So it will depend on who you've hired and the practices in your state. You need to take time off to be there. So Either you need to go to the bank the day before, or you need to be at closing. If you sell any securities, remember, it takes time to settle those transactions, 3 days. It's not an instant thing. The amount of your earnest money or your escrow money or deposit money, all that money that we discussed before in other content pieces, that money is subtracted from the down payment required by the bank. So if you're financing 100%, you will get a check at closing. If you're putting down 20%, then yes, of course, you need to bring the balance. Now, on closing day, it's a good day to take off work because you need to do what is called the walkthrough, as I mentioned before. And the walkthrough will make sure the house is in the manner to which you expect. And this is especially important if the house has been left unattended. Water leaks, animals, frozen pipes, air conditioning leaks. It doesn't matter the climate or the location. I've seen cars crash into the side of houses. Now, that doesn't happen very often, but yes, of course, it does. And if something happens, well, you need to see it for your own eyes. And of course, it's going to have to be resolved. Once you sign all the paperwork and hand over the check, the closing period ends right then, but not in reality for you. Yes, but technically, the transfer of ownership happens once all the documents have been signed, the funds have been dispersed, and any outstanding conditions have been met. Ownership of the property is officially transferred from the seller to the buyer. The deed is recorded with the appropriate county or municipal office, and the buyer becomes the new legal owner of the property. Then there's the distribution of funds. The escrow agent, the title company, or closing attorney disperses the funds to the appropriate parties, including paying off the existing liens and mortgages, as I mentioned earlier. And they pay all the closing costs and fees. And they distribute the proceeds to the seller. Now, when do you receive the keys? Well, you receive the keys after the closing is completed and the deed is recorded. But oftentimes you walk out of the room and the real estate agent hands you the keys. But technically, you do not receive the property or the keys until you officially gain possession, which is when you have your deed recorded. And then you can move right in. Congratulations, you're a new homeowner. Now, these are all the steps. You can see these are checklists in a box, right? A, B, C, D. But were you able to get the best deal? The steps, this happens every day, all day long. 100 transactions, 1,000, 10,000 transactions. You're just a number. They just have you being processed on a conveyor belt. So the real work, aligning your goals with your dreams and finances, is part of the process that encompasses our home sanctuary method. So you end up happy. We cannot wait to empower you and leave first time home buyer remorse in the dust. Until next time, from the team at the First Time Homebuyer Workshop with Julie Marion, bye for now.